Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
We've got a bit of a different one this week, haven't we, Curtis?
You know what? We've got a show of two halves, I think it's safe to say.
Yes. Yeah, so just to sort of the plan today is that we've said it for a while now that Stephen Whitten, who obviously joins us on a fortnightly basis with his pre-recorded Men Able Moments, which we know is very well received and appreciated from across the business and the listeners to the podcast. We've actually got him on live this week to have a chat between the three of us as a quick update in terms of, you know, what Men Able have been up to about the raising the well-being and mental wealth, etc., in the car retailing sector. And, you know, we caught up with him in a good conversation around where he's been, what he's up to, and some of the plans around this year for the year ahead. So I think it was a well overdue catch up with Stephen. So look forward to that one in the second half of today's podcast.
Yeah, definitely. That's after the midway break. And Steve also goes into a bit more detail about Wellbeing Winners, which is the initiative he launched for the car retailing sector last year. So he's got an update on that. So that's all after the midway break. But before that, we've got some international news, haven't we? We've got international this week.
So we've got some good stories this week, but we'll get to them shortly. But we wanted to sort of touch on a few things that have hit the headlines just as we've been recording this week. And the first one, and this was covered in Nikkei Asia, which is obviously an Asia publication there. But Tesla rival BYD weighs EV plant in Mexico. Now, we've sort of alluded to this a couple of times because as Curtis and I spoke about recently about BYD in Europe and looking at a plant in Europe. And there was always this speculation that how would BYD get into the US market and that North American market? And it's now rumoured that they have got land, they've got property, some acquisition taking place in Mexico. And this is obviously in a plan to serve the US market. Now, there are questions around that. We won't mention the wall for one of the big questions.
I was just about to mention the wall. do they not know?
But it is, and there's a question whether, you know, even if they produce product from Mexico and try and get it into the US, will it still, you know, will it receive the grants and the subsidies that the Biden administration support manufacturers into the US market? Still be determined, but certainly gives them a foothold in that sort of Mexican, Canadian marketplace across the US and big opportunities. So it kind of shows that, you know, the power that BYD are now moving. And as the title does say, you know, going head to head full on with Tesla, who obviously significant plants across the US already.
And of course, we did have BYD on the podcast last year, and you know the conversation we did talk about the sort of global presence of BYD, but this story sort of reconfirms just how big they are, certainly in Asia, but they're targeting South America because as well as Mexico, they're looking at building a plant in Brazil. And a few weeks ago, we were talking about their plans to build a production site in Hungary, where they're already active, aren't they? Because I think they're involved in coach building in Hungary. Yeah. So definitely one to watch, isn't it?
It's a fascinating story, that, but it just shows how quickly they are moving, and that whole EV and the Chinese manufacturers are looking at that marketplace. And the other one that came out this week, and it was on the back of the financials and performance from Stellantis, but that Renault and Stellantis to increase cost cuts in turbulent year, and saying that the car makers' shares rose a rise on interest increased returns to investments, but face lower margins due to electric vehicles. Now, again, this is being covered in the Financial Times, and it's interesting that turbulent year is mentioned again in this story as well. Interestingly enough,
Yeah.
Curtis. But some big numbers in this in terms of what their plans are by 2027 in terms of cost cutting.
Yeah, because they've quoted the chief exec of Renault, Luca Di Meo, as saying, cost reduction remains our obsession. But he actually spells out just how big these cost cuts are going to be. So it's going to be, they're targeting to reduce EV costs by 40%, with plans to also cut costs for ICE production models by 30%. And that's by 2027. But that is pretty ambitious, 40% cut of EV costs. It'd be interesting to see how they actually address that one.
Yeah, it is. I mean, we know that, again, without getting too much into the Tesla and BYD stories, but, their advantage is the efficiency of production, and the cost that
Yeah.
that they've got in terms of that upstream and manufacturing process for those EVs, because they are potentially EV manufacturers all in all. So, I think it's key that the success of EV is that efficiency of cost of manufacturing. So maybe they are starting to take some learnings from those competitors and become more efficient in that production process to make that cost cutting. But as you say, 40% by 2027 is it's a big number to achieve, isn't it? It's
It
nearly
is.
half of the vehicle cost there coming down. So we will wait and see, and we'll certainly pick up on this in the future podcasts.
So, returning to the UK, we've got headlines this week from Car Dealer, AM, Motor Trade News, and This Is Money, starting with 3 acquisitions. So we've got 3 acquisitions to discuss this week, beginning with CarWow, which has bought car magazines Auto Express and Evo and its Autovia owner for an undisclosed sum. DM Keith expands in Yorkshire with the acquisition of Colin Appleyard and debuts with Suzuki across 4 sites. And we've got Platinum Motor Group, which has bought Pebley Beach, which also represents Suzuki. In our other news stories, we've got 10 insurers have reportedly agreed to pull gap sales following concerns raised by the FCA over commission structures, and car dealers slash up to a quarter of the price of EVs, according to What Car.
So, as you say there, big story this week around CarWow and that Autovia buyout that's taken place. And the story is covered in Car Dealer there. And the headline is CarWow buys car magazine Auto Express and Evo for an undisclosed figure, and that CarWow announced the purchase of Autovia, which publishes popular magazines and websites, and that the business will be integrated into a newly formed CarWow group with immediate effect, and saying that there's an interview with CarWow CEO on the Car Dealer website. But I mean, this is a big story, but actually, it tells a bigger story around this shift to digital from print as well, doesn't it?
It does indeed, yeah, because the deal, they've acquired Autovia, so they're the publishers of, as I say, Auto Express and Evo, but also the websites Car Buyer and Driving Electric. And it is an interesting story, this, because Car Dealer have actually spoken, as you say, to CarWow's chief exec, John Weissmanis, and he actually says within this that our thesis is that we can invest more into these brands, not less. Ultimately, we don't want to buy a business that we are going to shrink. That's not our MO at all. So that they are being bought to as investment opportunities. And certainly on the digital side, you can see that synergy, can't you, with what CarWow are doing at the moment. If they can start targeting directly the audiences of Auto Express and Evo, as well as those two website platforms, Car Buyer and Driving Electric. The only question that remains kind of unanswered is the future for those print publications, because Auto Express and Evo been around for a long time, especially Auto Express, and they do have a loyal, but
Yes.
they, in fact, they have a very loyal print audience. Auto Express every week, Evo every month, but that is a dwindling audience as print as magazine readers progressively move online to get their content.
Yeah, there's people that I know that do collect, particularly the Evo, don't they? That know what number. I think it's 359 from memory or something now. It's sad that, ain't it, Curtis? But I might be corrected on that. But and I only say that because I was contacted the other day about the concern that they've been collecting every edition since it was launched, and they're a bit concerned that those will now stop. I suppose there might be somebody in that household that might be quite happy.
Yes, yeah.
those things and now go, they've got to become a collector's item. I don't know, but I think you're right. I think the key with this in terms of what CarWow are doing. CarWow is currently in the market in terms of raising fresh funds in a crowdfunding campaign on CrowdCube, and saying that they've currently so far secured a 2.7 million support from 2,659 investors, and this is the second time it's turned to the public to raise money, with the previous CrowdCube campaign raising over 4.9 million in 2019. So, I think there was intimations that they're up to something, obviously, when they entered that crowdfunding sector to raise additional funds. But it's going to get quite interesting, this, because they obviously it says here that CarWow booked a 29.4 million loss in 2022 on revenues of 40 million after investing heavily in the motorway rival that is Sell My Car. So you kind of see how this is starting to link together a little bit with those magazines and those subscriber bases that they have, and as you say, that additional bit around EV as well, that electric driving sector that they've got in there.
Yeah, definitely, and some of the figures that they certainly allude to are pretty massive, because Autovia's portfolio, according to Vike Manus, will boost CarWow's 65 million annual hits by a further 100 million. So you can really see where the strength of the digital is going to be. And within the piece, they do actually say that their intention is not to put CarWow ads all over Auto Express or all over Evo. They go on to say, we are going to build products that suit the needs of those users. So yeah, that would be a fascinating one to watch, I think.
It is. I'm sure we'll return to it at some point when we hear more about it. And turning over towards acquisitions now, and as you said right at the start, in addition to that, which is a significant acquisition, but in AM Online, DM Keith expands with takeover of a 48 million turnover Yorkshire dealer. This is more my neck in other woods, a bit north for you, isn't it, Curtis, this one?
Yeah, we've gone very north for this.
Very Yorkshire.
Yorkshire.
Yeah. But it is, Yorkshire focused. AM 100 dealer group, DM Keith has acquired car and motorcycle dealer group Colin Appleyard's, adding 4 Suzuki dealerships at Bradford, Keighley, Huddersfield and Ashton-under-Lyne. You may have heard of a couple of them, Curtis, maybe.
You know what? I think the key to this story are those 4 Suzuki dealerships, because DM Keith, although they're a multi-franchise group, they represent Skoda, Seat, Honda, Ford, Kia, and indeed BYD. they didn't represent Suzuki. So this gives them a scalable entry point into Suzuki, and probably makes them one of Suzuki's larger partners. So this is a really good fit. Colin Appleyard, a well-established group. I mean, they're both family-owned. They're both privately family-owned groups, established back in 1971. As well as those Suzuki sites, it also operates 2 Subaru franchise outlets, and it has Nissan approved status for a repair status, and a used car site. So a very good fit here for DM Keith.
It is, yeah. I mean, DM Keith have proven themselves well over the years with Dougal and Angus there, from DM Keith. You know, they've really, in terms of predominantly within that scat, started off in Skoda, and then built their business from there. So, you know, I think from a territory perspective, it's a fantastic move for DM Keith. And as you say there, I mean, you know, friend of the podcast with Dale Wyatt in terms of Suzuki, you know, I think that really is a very strong addition to their portfolio now across that Yorkshire territory.
And heading south for the next acquisition.
Yeah, this is more your area, definitely.
Yeah, I mean, slightly west of me, but still in the south. This story comes from Motor Trader, and the headline is Platinum Motor Group buys Pebley Beach. So this is Platinum Motor Group, who are based in Trowbridge, which is in Wiltshire, has acquired Pebley Beach for an undisclosed sum. Pebley Beach operates Hyundai and Suzuki dealerships in Swindon, and a Suzuki dealership in Cirencester. So more change here for the Suzuki franchise. It already confirms that the businesses will actually be renamed as Platinum Hyundai and Platinum Suzuki at some point. And Platinum already represents Hyundai in the Trowbridge and Chippenham areas, and said the addition of Swindon will provide synergies. And it also operates franchises for Renault, Dacia, Nissan, Toyota, Skoda, KGM, which was SsangYong, and Vauxhall. So, you know, again, this is another good fit, isn't it?
Yeah, I mean, you know, there is a statement there that obviously they do say that the Platinum Motor Group ownership and their respective team, they found that, you know, the same core values and a lot of synergies between the two businesses. So they feel that it's a very confident in the future for the team members and customers, and that they'll, you know, they feel that that they've left this in very capable hands, and for the future of this business. So, I mean, a great little purchase there, and again, a great little geographic coverage expansion for them as well, isn't it? And as you say, further realignment of those Suzuki partners feel that seems to be happening there at the minute.
Yeah, and I think we're going to see a lot more of these sort of small to medium-sized groups acquiring adjacent territories from smaller groups as the year progresses.
Yeah, definitely. And returning to AM Online, and we sort of touched on this recently with what the FCA were looking into around gap sales, and this is that insurers agreed to pull gap over FCA concerns, and saying 8 out of 10 insurance firms have agreed to pause sales of the GAP, the Guaranteed Asset Protection Insurance, at the request of the financial watchdog. So, yeah, this is a bit of a significant one. I mean, GAP just seems to be continually, one way or the other, good and bad for retailers in the sector.
Yeah, this story we've certainly, I think we've talked about it on the last couple of pods, as it's become a discussion point in the sector. And this is all around those discretionary commission arrangements that the FCA have been looking very close. I mean, they were clearly unhappy with what was going on, and they are looking at it. But the story does actually say, confirm that the FCA said it will carry out a second round of discussions with those gap providers that will continue selling the product, although it said that these have agreed not to use gap distributors in the interim. So there's still more to play out in this particular story.
Yeah, and it does go on a little bit in the story, but as always, we'll share the link on Monday morning through the newsletter. But it's saying that the action follows findings in the FCA's latest fair value measures data, which shows that only 6% of the amount of customers pay in premiums for gap insurance is paid out in claims, and that it says that it's seen examples of some firms paying out 70% of the value of insurance premiums in commission to parties involved with selling gap policies. So there's obviously a bit of a significant concern there from the FCA in how gap sales are being managed and payouts, premiums, etc.
Yeah, I think we can safely say there's more to come on this story. So
I think there is.
we'll provide updates as and when.
And the final story is Mail Online. So car dealers slash EV prices by up to a quarter in frantic bid to stimulate sales, and saying that car makers slashing new EV prices by nearly a quarter in an effort to spark sales, and that demand for battery cars has dropped by 25% in the last year, and that the introduction of the Z mandate, which I think we mentioned a couple of times on this podcast, means dealers are having to offer huge discounts to increase registrations to help manufacturers avoid huge government fines. Now, there is a lot going on around the Z mandate, and we mentioned it last week with the new vets thing and everything else, but there is obviously a significant concern that the traction and the growth of EV is slowing, or fairly stable now, that there is a lot of incentives, a lot of support coming from manufacturers to try and stimulate that activity, particularly in the private registration market.
Yeah, definitely. And it's worth mentioning that this does come from This Is Money. This Is Money is published by the Daily Mail, and this is really written for a consumer audience. So it is slightly sensationalized.
Just a bit.
But picking out some of the detail within the story, because it's all based on research done by What Car, and as all dealers know, What Car has this new car deals. Well, it used to be at the back of the magazine. It's obviously online now, and this is really what Car research has shown dealers are prepared to discount on new car prices. So this analysis compares January this year with January last year, and it found that the average cash and finance discount on EVs rose from 2.4% 12 months ago to 7.5% in January this year. And that headline figure of up to 24% reductions, that's really based on their findings on a particular model of the Vauxhall Mocha Electric, which had a retail price of £36,610. But according to What Car's new car deals, that could be bought for £28,231, which is a 24% discount, equivalent to £8,400. So quite a hefty saving there. And within the piece, that they've looked at a basket of several vehicles, all with discounts ranging from 7% up to that 23.5%.
Yeah, and just to support the findings on this, because auto retail, they track some of this activity as well, but from a manufacturer scheme perspective rather than a dealer discount perspective. And I mean, clearly pre-pandemic there was always lots of deposit contributions, discounts, subvented finance. We saw all that go away when production clearly slowed down, but you look at some of this now, and it's, as you say, it's very much focused where you've got like the Q8 e-tron that's got a £7,750 dealer contribution. The Q4 e-trons similar with a 5,250 contribution, but you just see all this now starting to creep in, where the things like some of the Honda product has got up to £5,000 dealer contribution. So there is certainly a lot of activity in the new car marketplace to stimulate that consumer activity, be it through front end discount, dealer contributions, subvented finance, or deposit contributions. But you can clearly see that increased activity in the market there.
Yeah, definitely. And just to support what you're saying there, Phil, because I was doing a bit of research last week on 0% APR rates for new EVs as we go into the March plate change. And it's probably easier to list those manufacturers that aren't supporting new EV vehicles with 0% APR. There are actually some incredible deals out there at the moment, and of course, this is all to stimulate that retail demand, which we have seen flagging certainly over the course of last year and into this year. So March is going to be the real sort of turning point for the sector. We'll know just how strong that retail demand is and whether it will actually turn a corner.
Definitely, we'll keep you updated as we get the new car registrations and start to unearth that by fuel type as well. What's happening in the market.
So after the break is our conversation with Stephen Whitten, talking about how Menable is helping address and promote mental well-being in the car retailing sector.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are, and on your podcast feed. Next up is our latest Menable moment, looking at mental wealth and well-being awareness and best practice in the automotive sector. With me, Stephen Whitten.
Well, regular listeners will know today's special guest, Stephen Whitten, from our Menable Moments, which have been running every fortnight on the pod for the last couple of years, focusing on addressing and improving mental wealth in the automotive sector. So welcome back for a chat, Stephen, and thank you for introducing yourself there.
Do you know what? Yeah, thanks, guys. Thanks for having me back. It was a bit odd, actually, hearing myself introduce myself. So, but yes, good.
Yeah, good to have you back on.
Well, I mean, we've said for a while now that you've been on in person a few times over the years, but obviously, more recently, it's just that you've provided us with a pre-record on a fortnightly basis, and we'd always said we need to get you back on in person, have a proper chat with you between the three of us, and everything else. So here we are. And early on in 2024. So, as Curtis said, I mean, welcome back, and it's great to have you on live.
You just want me sat in one place, don't you?
Well, yeah, because I mean, we've had the birds, we've had the
we've had the sea,
the airport, the trains,
we've had all of that.
Planes and automobiles, Steve.
Yes. And we know that you are. This today when we're recording, you are obviously waiting for a taxi to get on another train to go somewhere else, but. We've managed to grab 10-15 minutes of your time, which is great. But I think we thought it was, let's say, a good idea to sort of get an update for the listeners on your work with Menable, what's been happening, discuss some of the work you've been doing with dealers and suppliers, and give an update on your Wellbeing Winners program. So let's start with just an outline of what you've been doing and what Menable is and what it does for the industry.
Yeah, sure. And it's we are providing mental wealth strategies, joined up strategies for automotive businesses. And what we're finding is that probably like many of us, we don't come from that background. We don't come from a well-being and mental health background quite often, and it's a busy, fast-moving sector, and that's sort of one key part of the jigsaw puzzle that many businesses need a little bit of help with. So we combine our experience, or my experience, as you know, across the industry, long time, and help them moving forward with various strategies and stuff. And I think, as you guys know, we've honed that down in the last couple of years, particularly to talk more about now mental wealth, which has raised a few eyebrows, and also to focus in on culture. because I think that's the key part of what we need to address.
And Steve, it's probably just worth adding for listeners who maybe haven't heard you or don't know about your background, but you also come from an automotive background because you've worked in dealerships, haven't you? As part of your career.
Oh yeah. I mean, I started in the industry as a trainee car salesman in a Skoda dealership.
Yeah,
and I look back, it was at 1985. How long ago was that?
that's a long time ago.
Yeah, let's not go
I
down
know,
in
I was
time
10.
and age though.
Yeah.
We've done that a few times
Yeah,
on the podcast. It makes us feel very old.
Yeah,
I thought I was about 10.
Yeah, okay.
Now,
Yeah.
Steve, since launching Menable, you've worked very closely with a number of dealer groups, dealers and suppliers. What are the common issues you're seeing and how are you helping to address them?
Well, I mean, this does link back to my background, really. So I was, the rest of my background and history in the industry is 16 years working for OEMs, running training departments and sort of the consultancy divisions of a couple of companies as well. And I even had a stint as a dealer principal for a bit, and that in itself is a good case study really for what I'm seeing now, because I joined a large PLC group in a regional role, and within a few weeks I was parachuted in to be a DP because the DP had left that particular business, and it was like, who we got that could sit in the chair. Now, whilst I might have kicked off a little bit about it at the time, it was a baptism of fire. But I look back on it now, and I think when I go into businesses now and talk to them about what's going on, some of those issues still exist. And those issues are that we are traditionally a very reactive business. And I think I've got three key areas that I think is what we are now about and what we bring together with all of this. And that is that, one, the industry is still very male dominated. I know there's a lot of work going into that, but that's probably going to be like that for some time. And, probably always will actually, but it's very male dominated. We have a masculine energy. That's nothing to do with gender balance, but the masculine energy is about, the way that we approach business, because we're all about targets and performance and stuff. And we're a diagnostic and fix it business. We diagnose a problem rather, and we then go ahead and fix it. Put all of that together, and what we have is a very long legacy of a culture that is like, oh, well, you've got mental health problems, or you're not feeling yourself today, or whatever it is. Well, you can go off and deal with that, because actually we're far too busy doing this stuff. And I'm still seeing that to some extent, in varying degrees, if I'm honest. And some people would say, oh no, that's not fair. That's not what's going on at all. But I do still see that a lot.
And I mean, the industry, and I say we've between collectively we've been in the industry a while. Let's not get back on the age and time thing, but historically, it's a tendency in the industry, and broad brushing here, but to gloss over mental well-being, mental health, mental wealth, etc. issues in general. Do you think are the dealers now more switched on in it? We know that there's a lot going on, as you say. There's a lot going on in the sector at all levels, senior level all the way down. But do you think we are a lot more switched on about the understanding, the identification of mental wealth, the support of a sector than we may have used to be? Do you think it's still? I mean, you may argue and say there's a long way still to go, but do you think we are better than what we've been before?
Oh, without a doubt. Yeah, without a doubt. And I think, if I'm honest, I think, you giving us the platform to do this every fortnight has helped. We set off right from the word go with Menable, and we said, well, our strategy is going to be awareness, education, and prevention. And, we are seeing the raising of awareness going on. I'm seeing some fantastic stuff that Ben are doing as well with their, going around with their Ben bus and all that sort of stuff. So I think between all of us that are involved in this in some way, collectively, there is a huge amount that's been done and being done to raise awareness. I think your previous question about, what are we doing to help address some of those issues, is continuing to use that awareness that's being raised, and now going into businesses and saying, look, let's help you with your training your managers, educating the people around you, and making it okay to have conversations about mental wealth. Because actually, as we always say, when people feel good about themselves, they perform better. So, and what I'm seeing by comparison is that there are businesses that are embracing that, and, they're flying as a result.
Now, last year, Steve, you launched Wellbeing Winners, which was a Men-Able initiative, and you actually came onto the podcast to launch it. Can you outline what that covers for any listeners who might be unfamiliar, and also give us an update on how the scheme is actually going?
Yeah, well, we've as you say, we launched it sort of middle of last year. So I think we're probably still very much in a bit of a pilot phase, in that we're kind of working it into the industry. But we've had some great take up in terms of companies that are intrigued, if I'm honest. And so the way the program works is it starts with an initial assessment. We try not to make it look like an audit, but I suppose when you're asking people questions and ticking boxes, it's got that feel about it.
Yeah.
So this initial assessment, that then generates a fantastic conversation, creates an action plan, and then we work with that organization to say, right, where do we go with this? Whether that's training managers, raising awareness, back to the stuff we were talking about just now. And then the intention is that they sort of commit to a 12-month program, and they get assessed every 6 months, and hopefully they've moved through bronze, silver, and gold. So that's the intention of it. It's quite rigorous, and it sits with, I'm not sure if many people know, but the health and safety executive actually outlined some areas for psychological safety in businesses. And I think they were disappointed that hadn't been taken up by business in general, not just our sector. So we've kind of taken that framework a little bit and gone out there and said, right, let's do what we can here. And our intention with it, and our key focus for this year, is to get that as much as we can moving towards being a thread that runs through the industry. So a bit like, you wouldn't book a holiday without it being an ABTA travel agent, for example. The long-term goal is that's where I want us to be with Men-Able Wellbeing Winners, is that, would you want to go and work for a business that doesn't have that accreditation? And the second part of that is to be a lot more intentional about it, and focus in on some of those smaller businesses, the bedrock of our industry. You asked me where my career started, and it literally was in a backstreet used car dealership that was part of a Skoda business at the time. And they are the foundation of our business, and that's who we want to help with this, because they don't necessarily have access to the infrastructure that the bigger organizations have.
And it's probably worth just adding that you've had some support from Motors, haven't you, for the Wellbeing Winners initiative? And it's actually pretty much open to anyone listening to the podcast, isn't it?
Yeah, I mean, that was amazing when we had the conversation with Motors, and they said, "Well, we want to sponsor you." I was blown away, as you know, Curtis. We, had a couple of conversations like, "Is this real?" But they're amazing. They're a great organisation. They've continued their sponsorship of us for the next year, and what that enables us to do, and I mentioned those smaller businesses, is if you're a Motors business, we can give you a discount on the initial assessment. So that's how we're using that sponsorship. But if you're also an employer with less than 10 employees, so if you are one of those smaller businesses we were talking about, then you can put your name in the hat for a draw to get a free assessment, and we're doing 4 of those a month. So, and we couldn't do that without Motors' support. So yeah, big shout out to them for helping us on our way with that. It's been great.
Yeah, I couldn't agree more. I mean, we haven't got time today to go through everything, but I mean, you've got a lot planned, and we've been listening to some of your key focuses for this year in what you're looking at rolling out, and we'll continue doing that through the Men-Able moments on a fortnightly basis. So, I mean, for me, it just remains to say, thanks for coming on. Thanks for coming on live. It's been too long. And, Curtis and I know the listeners do really enjoy those snippets of those Men-Able moments that you supply on a fortnightly basis, whether on a train, whatever. It adds to the value. But it's what you say in them, and it's the takeaway moments that it's all about. So, I want to just personally and thank you for me and Curtis that thanks for doing this. It's adding the value. And I think, as you said right at the start, it's spreading that word, it's spreading that culture around mental health, mental wealth and mental well-being across the businesses and the sector. So I just want to say thank you for that. And just finally on that, in terms of anybody listening and they don't know where to get in touch and you're there to help and support and get involved with businesses. And I know you've had a busy start to 2024 in terms of that training and getting that culture within businesses. How can they get in touch with you other than through your normal LinkedIn profile that is very prolific?
Yeah, have you noticed that I'm on LinkedIn?
I have, yeah.
On occasion.
Yeah.
We had, just once or twice, the odd post here and there. Yeah.
Yeah, once or twice you mentioned it. No, yeah. So you can catch me on LinkedIn, Stephen J. Whitten, or my email address, which is stephen.whitten@menable.org, or through the website, as you've said before, is menable.org. But similarly, guys, in return, I have to say, massive thanks to you. I didn't realize it's been 2 years. I guess it has, hasn't it? So that's amazing. Thank you so much for the opportunity to have this platform. And I know that, a lot of my Men-Able moments are shooting from the hip a little bit and saying what I see and seeing what I say and all that. But I'm delighted that it's adding value, and long may that continue. And again, thank you, and thank your listeners for helping to support that. It's been amazing.
No, you're welcome.
Absolute pleasure, Steve. No problem.
And just finally, anybody listening, anything to do with mental health, well-being, training, anything like that, just reach out to Steve. He's more than welcome. He'll more than glad to have a conversation with you and support you wherever he can. So thanks for this, Steve. It's been a pleasure as always, and we knew it would be. And enjoy the rest of your day and hope you get your train on time.
Yeah, brilliant, guys. Thanks ever so much, and I'll catch up with you in a couple of weeks. Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.